Welcome to the Portico podcast. This is Mike Casey, the founder of Portico Advisors LLC. In today's episode, I speak with Monica Brand Engel, a co-founding partner at Quona Capital, a venture capital firm focused on fintech for inclusion in emerging markets. If you've looked into EM fintech, you've probably come across Quona and their portfolio companies. For example, Sokowatch in East Africa, a working capital provider and last-mile distributor of fast-moving consumer goods for informal retailers. Then there's Coins in the Philippines, a mobile, branchless, blockchain-based platform that provides unbanked and underbanked customers with direct access to basic financial services. And this company was acquired by Go-Jek in 2019. Or there's Konfio, a digital banking and software platform for SMEs in Mexico, which received a $100 million investment from Softbank as well as a $100 million secured credit facility from Goldman Sachs last year. I was excited to get Monica on the podcast because she's built a career in two of the most compelling themes around: financial inclusion and financial technology. Our discussion opens with her walking us through her career trajectory. We then talk about the convergence between philanthropic and commercial investment across emerging markets, the commonalities and idiosyncrasies across the markets in which Quona invests, the quality of fintech entrepreneurship in EM, the prospects for technological and business model innovation to migrate from emerging markets to the United States and Western Europe, and the biggest obstacles that fintech startups encounter as they attempt to scale, among other topics. I hope you enjoy our conversation. Monica, welcome to the Portico podcast. It's great to have you.
It's great to be here. Thanks for having me.
Our pleasure. So, one of the things that I want to sort of start with is, to me, your career trajectory is fascinating. In part, it's because it dovetails with the evolution of what's broadly referred to as impact investing. And so to start, I was wondering if you could share what sparked your initial interest in the theme of financial inclusion and how it led to your current role as a partner at Quona Capital.
Sure. It actually goes back quite a ways because I'm the product of many threads that I wove together. So I'm half Peruvian, half American. We lived in both the United States, moved around a bunch, was in Chicago and a suburb of New York, and then ultimately in Silicon Valley, which were my formative years. But I also spent time as a child in Peru, and it was my Peruvian side was very part of my life. And I wanted to weave those factors together, which is why early on in my career, I worked in financial services and I worked at an old school financial services. I was an affiliate of Wells Fargo doing small business lending. And in those days, to do small business lending, it was as much about character as it was about capacity. So you had your algorithms figuring out what their debt income coverage was, but then you had to figure out, is this person going to look you in the eye and pay you back? And that idea of really weaving together what we now call tech and touch is such a critical part of why I ultimately started Quona. It was a co-founding, bringing in different skill sets: financial services, technology, venture capital, and understanding of emerging markets. So career-wise, started in traditional financial services, formative years in Silicon Valley, went to business school thinking I was going to go to LATAM and ended up in Africa because of what was happening there post-apartheid and just an excitement about kind of a continent at the birth of a new era, and worked there before joining a microfinance organization, which really said two things, which also are very relevant to Quona. The two reasons why the person who was leading the microfinance organization at the time got me to leave Africa, where I was in Cape Town, and go back to run product innovation. He said, the only way to deal with the problem as big as world poverty is to mobilize a resource equally as large, and that's the world's capital markets. And he said, you have to come now because we can't be patient with poverty. And both of those were such a call to action to me, both about thinking big about problems and really understanding that mobilizing private capital markets are critical for us to really make dents in any kind of solutions, any kind of problems we want to solve. But also the notion of markets work quickly. And whatever side of the political spectrum you're on, they work imperfectly, but they're fast. And so both of those, and I think Quona is that way. We are very agile. We are a small team, and we're united by a purpose. We really think venture capital could be a force for good. And we want to bring that skill set, that operating experience in financial services, technology, and venture capital, to bring it to bear for a really important problem, which is inequality and wealth creation. And we think that that venture capital is a very powerful tool in that effort.
Yeah, I like it. So, you just mentioned that you wanted to mobilize capital markets and that markets work quickly. Over time, we've seen a bit of convergence between, philanthropic or sort of the development finance institution types of investment, and then the commercial investment across emerging and frontier markets. And I think this is particularly the case when we talk about fintech. And so, as we look at that convergence, well, first of all, do you agree that there's a convergence between philanthropic and commercial investment? And then two, is there a trade-off between the societal impact that you seek to drive and the financial returns that commercial investors would be looking for?
I definitely think there's a convergence, what we call profits with purpose. And maybe I'll share another story because I think it brings up another person you may have interviewed, Roger Leeds. I was teaching a class when I was head of product development for this microfinance organization called Action. That was the one that recruited me to leave South Africa and join and help this effort to make financial services relevant for informal sector. I was teaching a course at SAIS to both on impact investing and on financial inclusion. And I remember Roger Leeds at the time was teaching a course called Emerging Market Private Equity. And he called me into his office and he said, why are you teaching? I'm looking at your syllabus and there's a lot of readings that could be in my course. Why do you have this class? And I said to him, I said, when the companies that you are writing about stop polluting the environment, stop exploiting labor, and stop making products that hurt people, then we won't need my course. And when my companies perform as well as your companies, we won't need my course. I said, but right now I think they both have something to learn from each other. So the reason why there's a convergence is, one, we cannot as businesses not think about the impact we're having on the communities and customers we serve. So that's just a fact. And they can vote with their feet and vote with their wallet, or I think that regulators can put them out of business. But I think it's really clear in the world of fast news cycles, recordings in people's hands, internet that allows us to share information, you can't hide. So I do think that businesses have an imperative, and also the accumulated effort of these unintended consequences, what we call externalities in economics. So I think the business world, and I think there's also people in those businesses who want to live in a different kind of world, one where you can breathe the air, where you don't have to worry if you're going to get sick from what you eat. So I just think there's both people who run these businesses who care about the world and other sort of maybe force functions. And on the development side, I think the development world has a lot to account for the amount of money that they've spent and the limited results they've had. So I think this notion of return on investment and bang for your buck and effectiveness, they can't hide either. I think they can't hide with the reasons why they would say they haven't been effective. I think both sides need to say we have to have a common purpose, and I think that's why you have impact investing. It's not simple though, because people in their brain still think of philanthropy and business in a little bit a bifurcated way, and it's only when people bring their whole selves to work, their heart and their head, both all of their capacity and judgment and decisions on how they manage other parts of their life, how they raise their kids, where they choose to live, how they live in those communities. All of those resources need to be brought to bear with how they run their businesses and how they manage their money. And that is why we see this enormous inbound interest from investors. All of our funds have been oversubscribed. And I think it's because what we're saying, profits with purpose, resonates with people, and we're having performance, and that also resonates with people.
Yeah, I love it. So you really threw down the gauntlet there with Roger. I feel so bad for him.
By the way, he's a mentor of mine. So that should have been someone who has always challenged me, says what he thinks, and is someone who I hope to be as accomplished as he. So I meant that as complimentary. Hopefully that came out.
No, all's fair on the Portico podcast, and certainly in Roger's office. He holds your feet to the fire. Um, the way you closed your previous comments about the alignment of the head and the heart reminds me of this quote that's at the beginning of Barbarians at the Gate from the founder of Nabisco. And I had to look it up real quick. I don't know this off the top of my head, but the quote is, "The officer of every corporation should feel in his heart, in his very soul, that he is responsible not merely to make dividends for the stockholders of his company, but to enhance the general prosperity and the moral sentiment of the United States." And I think that there is this yearning among younger generation, perhaps, not the pioneers of the private equity industry per se, for that alignment that's sort of been missing in traditional private equity for quite some time. And I guess is that something that you see as well in terms of maybe the millennial money, for lack of a better word, versus some of the large institutional investors that are maybe slower to pick up the baton for impact investing?
There is definitely a generational catalyst that's happening. And so, yes, they talk about millennials inheriting sort of their parents' or grandparents' wealth and their sensibilities being very different than previous generations. That said, I have to be honest, the majority of Quona's capital comes from institutional investors. So we have Wall Street investment banks, we have insurance companies, we have Fortune 100 corporates, we have university endowments, we have pension funds. These are our LPs. And in fairness, some of those LPs are because their own sources of capital are these very millennials that you speak about. And I do think there's a way millennials have fewer filters. So they say what they think and they say it quickly and they spread it quickly through social media, through their own groups. So they certainly have been a catalyst. But I actually think it's much more fundamental. That I love that Barbarians of the Gate quote. And I think if you actually go back generations, we have these views built into our organization. Corporate charters, thought about employees. There was an implicit contract, if not an explicit one. So I think of it less as of a change and more of that maybe we lost our way, that maybe with acceleration in technology, with efficiencies that market bring, with even you think about sort of automation and sort of the idea of specialization of labor. All of these things are trends that brought so much prosperity. They're the forces behind economic growth. And I think that we might have misapplied some of those very principles to parts of our world, like how you have relationships. What is our responsibility for each other? What does it mean to be caring? Or even what part of the brain do you use? I think we might have inadvertently taken the wrong lessons. So to me, it's less of a change and more of reconnecting something that I think is very fundamentally human. I think people want to feel connected. They want to belong. They want to be cared for and care for others. And businesses shouldn't be as something separate from that. It's just a means, a way to realize those goals. So I just think to me, it's more of a reconnecting with values that I think govern not just our own country and society, but actually humankind. If I'm going to get very philosophical, and not divorcing that from how we run our businesses.
All right, so switching gears, Quona invests thematically in this financial, or fintech for inclusion theme across a global platform. And I'm curious to hear what you view as the commonalities and or the idiosyncrasies across the markets in which you operate.
One of the premises of Quona, in fact, our name means something in every region where we operate. So if you, it's actually kind of a running joke among my partners. If you ask one of my partners, why did we choose the name Quona? They'll say it was a 5-letter URL that wasn't taken, which is true. But what I would say is that Quona means to see in Swahili, and it means literally where roads cross in Hindi, and quo is an elemental part of many phrases in Latin. And less than the actual translation, the fact that it means something in every place where we worked ties to a fundamental principle, which is we're all connected. We're all connected not only because borders are becoming more porous and because trade is becoming more international, but because we're connected since I think we have some sort of fundamental shared beliefs, meaning everybody wants, most of our markets, what people want are aspirational. They want a better future for their families. They want to be able to work in an unencumbered way and get capital to run their business. They want to be able to send their kids and educate them in schools. They want to be able to build a house and improve their home. So those fundamental needs, which actually are at the heart of why fintech has been so revolutionary, those are similar across all of our markets. And the nuances are pretty subtle, meaning, for example, in an Islamic country, you can't charge interest, but they're still the equivalent of loans and capital, right? So it might be called something different. The business models might have different restrictions, but those fundamental use cases appear very commonly. And even newer trends like challenger banking or embedded finance or insurtech, we actually see in each of our regions and countries that are very different otherwise. So those are things that I think unite and why we have a very compelling value proposition, because entrepreneurs in South Africa want to know what the ones in Brazil are doing. And the ones in Indonesia, actually, we link them up with a similar business model in Kenya. So that similarity, I think, really enhances Quona's value proposition. The difference, which is very important, because I also think you have this mistaken cut-paste approach where you can be what I call a tourist capital, kind of fly in and think you can just plug in a model that's worked in another market. That also, I think, is very flawed, because there are important cultural differences. There are important regulatory frameworks that really require tailoring in each of the markets. And there's, as importantly, important histories, like to understand why, sort of a model, while some of our, team in India can't visit the country next door in Pakistan, and understand, sort of where that comes from, and does that actually doesn't limit us from working in Pakistan. So we have, understanding and appreciating this history, this regulatory and cultural differences, and these very real market differences are part of what we call an alchemy. We actually call it an alchemy, not because we're not scientific and data driven, but it is because it is not a simple formula. It takes a very nuanced understanding of how to bring the similarities and adapt to the differences.
That's great. So two things. The first, when you were talking about the entrepreneurial talent in these markets, I think, would it be fair to say that the quality of human capital is exponentially greater, has just advanced exponentially over the last decade when you look at startups and entrepreneurs in these markets?
That's a great question. And I realize even in answering the last one, I was talking about the demand side, not the supply side, but you bring up a great point, which is the supply side. And the desire or appetite, I'll say, for risk taking is prevalent everywhere. I do think you have markets where it's been more encouraged or discouraged, and that could be for a whole bunch, again, of historical and sort of structural reasons. But we do see venture ecosystems popping up everywhere, and it's super exciting to watch. So you see them, the markets where we have the highest concentration of activity in Quona's own portfolio are Brazil, India, and South Africa, which correspond to the 3 core regions where we work: LATAM, South Asia, and Sub-Saharan Africa. But that again, those are all kind of growth markets, and they all have secondary markets like Mexico and LATAM, or Indonesia and South Asia. But they are not all the same in terms of the talent pools, and that might be, again, because of the depth of engineering talent, or even the incentives that different countries put on to promote small business development or to promote venture capital. You see, venture capital is kind of this flywheel, this virtuous circle, where the access to risk capital incentivizes people to leave a job, to go be a doctor, lawyer, banker, or whatever the traditional career path was beforehand. And it's only relatively recently that being a tech entrepreneur was cool. In many markets, I mean, look at Asia, that was not something that was encouraged or promoted. So, and even now, it's still, you would say, it's finally, in the last 10, 20 years, has really turned the corner. But once that turns the corner, you just see this proliferation. So the number of entrepreneurs is really growing exponentially. And something else is happening demographically. You have people who might go to the US or Europe for school or work after graduate school. And they realize that the market opportunity to test out some of their entrepreneurial ideas and seeds that were planted in these Western institutions is much more attractive back home. So you have this, what I call reverse diaspora, where you come to study or work in the US or Europe, and you're going back home to launch your business. And it's a really exciting phenomenon. And our pipeline, even in COVID, has grown, not shrunk.
Yeah, I love it. I realized that when I framed the question, it could sound extremely patronizing, and I didn't intend it that way. But it is that flow of people who are just building up knowledge and experience at leading companies all over the world, and they're going back home and building amazing businesses that were just not on the radar screen a decade ago, if you will. I'd love to pick up on this other thread that you left hanging on the copy and pasting of business models from developed markets to emerging markets. And there's sort of the rocket internet phenomenon. But I'm curious to hear what you think the prospects might be for technological and or business model innovation to migrate the other way from emerging markets toward the United States and Western Europe.
That's what we see. That's so exciting. So, when I say Quona literally means, is about connecting, we actually see it as two-way. We often talk about the culture of Quona of being a beginner's mind. We have as much to learn from emerging markets as we do to quote unquote teach them. And yes, there are lots of business model innovation where you are taking a model. Maybe a good example would be mobile point of sale, which Square or iZettle basically democratize the ability of a merchant to accept digital payments, which previously was really only available to more established businesses, small and micro businesses. Really, it wasn't a smart economic proposition for them until you have something like Square, which radically reduces the interchange and the ability and the unit economics of accepting digital. And so you see copycats and similar. I can give other examples where a model that was developed in the West gets copied and replicated and improved upon in the South or the East. But you see just as frequently now, models, a great example would be mobile banking or mobile money, where that really was a emerging market phenomenon before it was a US or West phenomenon. And it has to do with partly that there was no legacy infrastructure to replace. There wasn't really a cheap, effective way to exchange money and to have a digital stored value. So it just filled this void that really proliferated with the proliferation of cell phones and smartphones. So you see examples where the innovation is really starting in emerging markets. And we love that idea of this kind of cross-cultural, cross-market knowledge transfer. And we think that it's just the beginning. And for us, it matters less on who thought of the idea first, because even when I gave that example of the mobile point of sale, I mean, Square, iZettle, that's a US and a European model. I mean, they were the pioneers. But then you had Stone Pagamentos or PagSeguro in Brazil, both unicorns now, two payment unicorns in Brazil, which actually perfected the model, took the model in a different direction, doing vertical integration rather than adding on value-added services. So even when the innovation starts on the West, you see these improvements and this kind of back and forth, which again is what's beautiful about venture capital, about what we're trying to do. It's not about who thought of the idea, it's how you can bring it to market in a relevant way, in a value-added way for consumers and small businesses.
Yeah, I love that. That cross-pollination theme is a great one, and it's tremendously exciting. So you work with companies, if you imagine them going up the S curve, you're a growth stage investor. And this is like where the rubber meets the road in terms of actually attaining scale. So, what are the biggest roadblocks or obstacles that you see startups encounter as they're working their way up that S curve to scale? And how does Quona help them surmount those obstacles?
Yeah, there's a few. And again, some of them are internal, some of them are external. So on the internal side, you've already mentioned one of them, which is human capital. And we joke that, and I should clarify, we call it the scale up stage. So we are in that sort of sweet spot beyond pure seed investing, but even sometimes pre-Series A. So it's just when there is some initial proof of concept or product market fit, and we are really helping turbocharge and get to sort of a positive cash flow place. So that's kind of where that's where the alchemy happens. That's where we come in. And in that phase, I'd start with in terms of the bottlenecks, I'd start with, sort of the talent gap. And we often joke that, companies at that stage are run by COEs as much as CEOs, where you're chief of everything and you're basically wearing many hats: fundraising, managing risk, recruiting talent, developing and implementing business strategy. So basically, really doing, wearing, multiple hats and doing multiple functions until you start building a senior management team around you and building talent. And that process can be a bottleneck because in many countries, the pace of growth outpaces the ability of talent to come on and ride that wave. It takes, because it's not just a skill set question, it's a culture question of good enough, 80-20 rule, sort of iterating quickly, being willing to fail, all of these things that we talk about, in sort of venture ecosystems that might not be culturally trained or familiar in many markets. So I think that's the one. And so it's human capital. And the second piece is the culture, which is really about, and maybe I'll say something else, not just about doing things quickly and, breaking a little bit of China as you grow, but also this idea of what I call missionary versus mercenary. So when you start, our companies are also profits with purpose. They are trying to meet underserved markets. They're trying to do so in a profitable way. And there is usually a lot of, sort of conviction around the business model and what they're trying to do. And as you scale, you get a little bit more towards that factory model where you're bringing on developers, you're bringing on builders, you're bringing on talent just to grow and serve the markets. And the farther away you get from that kind of core purpose and farther away from the founder, sometimes you can become mercenary versus missionary. And again, it's probably an and, not an or. It's a mixture of both. You have to pay people well and give them places to grow, as well as inspire them. So, but that is something also that to maintain that culture effectively as you scale is a big issue. Third, I would say, is what I call the competitive response. So incumbents are usually willing to tolerate, someone sort of, either acquiring customers that they have neglected or even stealing customers that are usually unprofitable given the types of business models some of these incumbents follow. So for a while, that is sort of ignored or not reacted to, but it's when scale becomes interesting that they can use a lot of their market power. So that's another big challenge to scale, is how do you, the David and Goliath phenomenon, of how do you compete effectively, especially as incumbents use, sort of sticks, and tactics that aren't always about level playing fields. And whether that's regulatory capture or pricing competitive, I mean, you can, if you have a big balance sheet, you can starve your competition. So there are many challenges, and then it doesn't even touch the legal and regulatory ones of, for example, some of these, we mentioned mobile banking earlier. In some countries, that account can be looked at as a deposit, which is very heavily regulated. So even the words you use, like can you canvas an account versus a wallet, there are some countries that even dictate what you can call, can you use the word bank or non-bank. So it gets, it can get from the trivial to the existential, if you will. But I think successful venture building is learning how to navigate. I mean, there's minefields everywhere, right? And it's actually what kind of makes the job fun, but it's not for the faint of heart. And it is, a real art to be able to successfully scale and make money as well as keep your purpose alive in these markets.
Great answer. Okay, so at least prior to COVID-19, you got to travel the world and visit some of the most dynamic markets and meet with some of the most exciting companies that are starting up. What do people in the United States or Western Europe get wrong about scale-up stage companies in Africa, South and Southeast Asia, and Latin America?
I think the first thing they get wrong is to underestimate how sophisticated they are. I think we have this impression, and and there's phenomenal NGOs like Care International that sort of show pictures of people sort of who are of very modest means, in some cases in great distress, and it makes us think that the whole country is operating at that level. When you think of markets or ecosystems like Sao Paulo or Bangalore or even Nairobi or Cape Town, these are markets that have high degrees of sophistication, have well-functioning elements of their marketplaces, have developers and talent that are building robust infrastructure. People forget Amazon was developed in South Africa. Folks forget, Amazon World Services, AWS. So people forget sort of or maybe paint with a broad brush these economies that, yes, have problems and yes, have challenges, but they also have some phenomenal talent and assets that often get overlooked. So I think that's the one thing they get wrong. I think the second thing they get wrong, it's sort of twofold. I think assuming that market reaction and customer preferences are going to be similar as they are in the U.S. and the West, and that mistake can be forgiven. And that I said earlier that I work from a place of believing that people have very similar human needs, and that actually, if you think about appealing to people's better angels, people. I've always been blown away with how generous and how warmly I'm received, even though I'm quote unquote a foreigner in so many markets. Which is the same thing that happens when I go, to the Midwest or in the heartland of the United States. People are incredibly warm and accepting, and so they might take those, sort of human similarities, mistake that for real differences in how they want their products delivered, the kind of features and benefits they want incorporated into those services. So I think there is just a lack of appreciation of how important that nuance is if you really want to hit escape velocity. You just look at things like the red envelope, in China, to understand that, or WeChat, to understand that really tapping into local customs, local cultures, local habits can be the difference between literally escape velocity and sort of a stone wall.
Great. All right. So I'm going to transition now to the closing questions. I've called these the rapid fire questions, but in practice so far, they've been not so rapid fire. So I may need to come up with a different name. But the first one is, who has had an enduring influence on you?
Nelson Mandela. He was the reason why I literally left Silicon Valley and the Bay Area, which I'm a big outdoors person and I love, and moved to South Africa, never having been on the continent, and just his belief of that one person can help change a nation and change a culture and change history, and also inspire a movement of forgiveness and gratitude, to me has left an indelible mark on how I live my life, as well as how I like to be a leader.
Wow, that's a very strong answer. Okay, and an uplifting one at a time when we could really use that message, at least here in Los Estados Unidos.
Yes.
What is the best thing you've read in the last year?
I'll say Braving the Wilderness, and it's a book about making yourself vulnerable, while having a lot of conviction about your core beliefs. So it's really changed the way I think about leadership, and actually how I show up as a woman leader in particular.
I will have to check that one out. That sounds very interesting. All right. this is another probably pre-COVID thing, but where's your favorite place to travel?
My favorite place to travel is, I was going to say, Latin America, but that's not really true. It is actually, it's Kenya, it's Africa, and it's because two reasons. One is someone described to me, we were visiting a market in Africa, and they said it felt like Silicon Valley in the 1960s. And that's how I feel it is, that it is this kind of diamond in the rough, whose potential, who has so many core assets and whose potential we haven't yet realized. So, and because I'm a huge outdoors fiend, and I just think the landscapes there are beautiful. So they both are, this is personally very uplifting, and in terms of my vocation, very inspiring.
Excellent. All right. What advice would you give to a young person who's keen to build a career either as an investor or as an entrepreneur in the markets where you're active?
My advice is first, master your trade. I think a lot of people look for shortcuts or hacks, and I love them as much as anyone. As a working mom, I'm always looking for hacks, but I think you can't skip. I don't believe there's any free lunch. You have to master your trade, figure out what you love doing, and get really good at it. Nothing like practice and dedication. I would start there. And secondly, I would say get clear on your North Star, internal compass, and really always check in with it, because that will always guide you well.
Great answer. Well, Monica, this has been great. Thanks for joining us.
It's been a pleasure. Thank you so much. I had a lot of fun.
Hi, everyone. This is Mike again. Thank you for listening. I hope you found the conversation edifying, and if you have any feedback, good or bad, please send me an email at mike@porticoadvisors.com. If you're keen to learn more about private markets developments across the emerging markets, then smash the subscribe button on your podcast player, and please visit our website, porticoadvisors.com. That's porticoadvisers.com, where you can peruse through our research and newsletter archives and sign up for our monthly-ish newsletter. Now, if you like this episode, my only wish is that you please share it with a friend, colleague, or your connections on social media. Sharing is caring. Thanks for your help in advance, and ciao for now. The discussion in this podcast is for informational purposes only. Neither Portico Advisors LLC nor its guests plan to update this material, and the opinions and conclusions mentioned may change without notice. Neither Portico Advisors LLC nor its guests make any warranty that the information in this podcast is error-free, omission-free, complete, accurate, or reliable. Nothing contained in this podcast should be construed as legal, tax, securities, or investment advice.